og velkommen til det her event, som vi afholder sammen med Nordnet. I dag har vi DonkeyRepublic med os, en børskandidat. Jeg tror, de fleste måske har stødt på deres produkter. Så meget af fokusen i dag vil selvfølgelig være, hvad er egentlig investeringscasen inde bagved? Hvad er forretningsmodellen bagved det her delecykeludlejning? Så det er selvfølgelig det, vi prøver at håbe på, at de næste 30-45 minutter vil give jer et indblik i. Til at hjælpe mig igennem har jeg taget Erdem med, CEO i DonkeyRepublic. Han skal nok præsentere sig selv til at starte med, så det vil jeg undlade, så vi ikke gør det 2 gange. Som altid, stille spørgsmål nede i højre side, løbende igennem præsentationen. Vi gør det på den her måde, at vi først lige løber 20 minutter igennem præsentationen, og så tager vi spørgsmålene efterfølgende. Men stil meget gerne løbende igennem præsentationen, så skal jeg nok sørge for at samle op og være sikker på, at vi kommer igennem alle spørgsmålene. Det vil være lidt specielt. I må meget gerne stille jeres spørgsmål på dansk. I må også gerne stille dem på engelsk. Jeg oversætter dem til Erdem, og Erdem snakker dansk og forstår dansk, men foretrækker altså engelsk som koncernsprog, når han skal snakke forretning. Så det håber jeg, der er en vis forståelse for. Men I må meget gerne stille spørgsmålene på dansk, så skal jeg nok sørge for at få formuleret dem ind. Og hvis jeg nogle gange switcher lidt mellem dansk og engelsk, så håber jeg, at de også tilgiver mig for det. Og det kan godt være, at Erdem gør det. Men ellers, Erdem, jeg synes bare, at du skal starte med at præsentere dig selv og den forretning, du står i spidsen for.
Tak, Michael. Hej med jer alle sammen. Jeg hedder Erdem, og som Michael siger, jeg taler dansk, men jeg foretrækker engelsk i forhold til noget forretning. So I'll continue in English. I'm from Istanbul originally, grew up there, and lived in London, San Francisco before moving to Denmark, and established Donkey together with my 3 co-founders in 2014 officially, and I stand as the director and co-founder in the company. I have a background in management consultancy. I worked a couple of years with McKinsey. I studied mechanical engineering and public policy, 2 degrees that usually are interesting to put together. And I've worked in a couple of startups before DonkeyRepublic, one of which I've also started. If that's good, and I'll take you through 10 slides here over the next 15 minutes, and then look forward to your questions and giving a good overview about Donkey. But Michael always asks me, why did I start DonkeyRepublic? And maybe I start with that, Michael.
Yeah, do that.
Back in 2012, I was teaching entrepreneurship at DIS here at the Institute in Copenhagen. And I asked the class what was the most inspiring entrepreneur for them. And one of them said Travis and Uber. I hadn't heard of the company yet. And said, yeah, check it out. And I looked and it said everyone's private cab. And I thought this was really dystopic future, because I really enjoy the quality of life in Copenhagen thanks to bikes. And something I suffered from in Istanbul and also in San Francisco and London, that you can't just get around, and quality of life does suffer from not having enough space and activity when you're in and around the city. And I was looking into why bike sharing isn't picking up as a scalable business. It was only here and there with a few cities, and figured out that there was not enough innovation and not enough drive and scalability in mind. So with that in mind, I found my co-founders and put all the activities in motion, and then here we are. So that's short story, and maybe jumping into the first slide here with the numbers. We are today almost at 13,000 bikes and e-bikes. We are a company that's served so far almost 600,000 unique riders who've ridden a donkey. Almost 10 million trips in 75 locations in 14 European countries, those locations. And we turned over 33.5 million in 19, and a bit less in 2020 due to COVID. And we have about 63 employees, including our mechanics, 35 in the HQ, where our programming, business development, everything is done in-house with this team. remember to ask your questions, but I will take them with Michael curating after the presentation.
Yeah.
So why bike share and why do we exist? If you look at the city's goals, they really have livable cities are an important concern for cities. SDGs are clearly establishing why we need to do that. But if you look at one car trip being replaced with a bike trip, then some of the clear advantages is congestion effects. You save more than €1 per trip to society due to simply congestion effects. Emissions, ½ kilo per car trip that you replace with a bike trip. And most important effect actually is the health effect, because when we keep people active, then we have fewer chronic diseases, cancer, and so on and so forth. And that is the reason that public has seen bike share as part of public transport. So none of the other micromobilities have actually received public financing so far. And bike share is seen a bit like buses and trains and metro as part of public transport. That's why they have been receiving public financing. And if you look also the effects that we are creating for public, then it also well justifies why there should be public financing. If you look at our footprint, I mentioned these 75 locations across Europe. We are strong in Denmark, but also Benelux, so Netherlands and Belgium area, and a few other important cities like Berlin, Barcelona, Budapest, Geneva. The bright points in the map are MaaS cities, which is mobility as a service, where DonkeyRepublic owns and operates the bike share. And then you have the dark brown SaaS cities, which is software as a service, where we have franchise partners who are running the bike share for us and with our brand and with our, obviously, bikes and apps. It's two business models, and it's everything run under the one brand and one solution, which is where we're building the flexibility, also with the same bikes. So I can easily say that building a standard product, both in terms of hardware, but also in terms of software, is key for our scalability. And also is key for our scalability is the SaaS partnerships, which we launched in 2018. Before then, we were having to sort of build the brand. And now we're at a point where the SaaS partnerships are really growing fast, and we're having great traction there. In the core of the Donkey software, we're actually catering to quite a few partners or stakeholders, the riders and the fleet managers, the corporates, the B2B clients we have, the cities who want to see also where the bikes are and how they are utilized. And very soon we will be fully integrated to transport aggregators. We already are showing as a sort of an option in different maps or apps where you can see Donkey price and availability, but soon you'll be able to use Donkeys also without even downloading our app. So that's the transport aggregators. We have a diversity of revenue streams, and that's really, really good for healthy unit economics and resilience. And it helps us be innovative when we want to expand. We can find different ways to make the numbers add up. So obviously we start with rider revenue, and that's the largest revenue stream we have. We have pay-as-you-go, where you just pay for one time for one trip or rental. Our rentals are not squeezed to one trip. Many of the rentals are multiple trips where people keep the bike with them, which is also a quite nice, unique feature for Donkeys. Membership is a monthly recurring revenue from the riders until they stop it, obviously. But they get to use the bikes as much as they want when they buy the membership product. Corporate and campuses, we have already 7 such clients, and they also buy memberships for their employees. And we also sell them sponsorships on the backs of our bikes where we have the side ads. Cities. Cities are paying for bike sharing, as I just mentioned, and this is a growing source of revenue for us as well as our partners. So public funding, which is a really nice long-term revenue stream. And then we have the software as a service business, where we have many SaaS partners. They can be different kinds of institutions. Most promising probably are utility operators that already operate buses and trains and so on for certain cities. Now they want to operate our bikes. But there are also different types of collaborators we have from car-related businesses, bike-related businesses, NGOs, real estate developers, and so on, who for one reason or another decide to get into bike sharing. They pay us license fees, which are recurring monthly fees, high profit margin on those license fees. And then we sell them the fleet where we have the standard bike and e-bike that we sell to them. That's not where we try to make the largest margin. The competitive view, as we see it, there are three main competition. The one in the bottom is probably the names that you have heard of most, Lime and Jump, Voi, Tier. These are companies that have raised a lot of money from venture capital, and their main focus is e-scooters, but they now also have launched some e-bikes. Their focus is Tier 1 and some Tier 2 cities, and they are very focused on rider revenues, not public finance. And electric vehicles and especially scooters are more expensive compared to bikes. So if you look into the differentiation, one part is clearly catering to public and to cities, especially Tier 2 and 3 cities, where donkeys are a very attractive solution for cities to procure. For riders' perspective, we're much more affordable on a trip-by-trip basis. And we also offer a lot of more flexibilities for cities, like working with a local partner. Or we establish virtual stations where people return the bikes and they're not free-floated, which is also important consideration for cities. Then you have traditional providers of bike sharing, like Smooth, Nextbike, JCDecaux. Some of those big, large city systems, like the one in London or Paris. These are quite flexible and responsible. They are also focusing on Tier 1, but they're also very expensive and typically work with cities who want to establish their own brand with these bike shares. And the third category is more startups like Pony, Beryl, and Bond, which are early stage in their journey, and they don't really have a full feature set. They are also looking at Tier 2 and 3 markets and also looking at public financing. Donkey, I think we are the most affordable, flexible, and responsible provider, focusing on Tier 2 and 3 cities, which is less than 1 million people. That is about 2,500 cities across Europe. We are having great time with riders and good traction with riders, but also with cities. So we're also collecting revenues from public financing. Okay. The next one about explaining a bit about regulation, because city and city relations and public finance is so important. So until 2016, here's a picture of Büsügün. Bespoke bike shares driven by public investments. That was how bike sharing was done. Büsügün is a good example. They are investment-heavy solutions, expensive to operate, and typically requiring physical docks. Then between 2017 and 20, we had explosion of bike shares and then scooter shares driven by venture capital and free float. And sort of the thesis was put as many vehicles as possible, as soon as possible. And that created actually a reaction from public. They did not want so many bikes to be left all around and scooters and so on. So what we see now is regulation for more sustainable businesses, a tighter regulation, a more long-term take from the public side, and they are willing to pay for services that fit a more long-term sustainable play. So here's some criteria that the cities are looking at when they are procuring or giving licenses to different bike shares. Looking at controlled parking, affordability or pricing towards the end users. Do we work with local partners? What are the bike features? Are they long, durable bike that will not be trashed within months? Sustainability profile in both production but also operation, quality of service, and if we recruit our workforce rather than using gig economy. And we do fulfill all these criteria, and we've been very responsible and sustainable in the way we run things. So we've been winning fantastic outcome with the cities. We've been winning most of the deals that we apply for between 2018 and 20. It's been 41 deals that we won where we applied, and increasing number of those are actually referrals and growth. So people coming back again and or referring us to others. This is just to show you the pipeline of what happened in 2020 in the first half, and then in the second half, despite COVID, we had a good year. And here in 2021, it says half one is actually only first quarter results, what we see here. So things are really going fast and heating up and going well in terms of getting more deals in place. Just about our ambition in the next 4 years. This is first showing the 2019 performance we had. It was 33 million kroner that we had in revenue. This was mostly rider revenue. You can see that there was some hardware and some license revenues also. But there was really no B2B or BTG revenue, so no corporate or public subsidies directly to us. And we see a lot of that happening now during 2020 and in our pipeline. So for 2024, what we expect is a much stronger SaaS business, so software as a service, and partners paying us the recurring high profit margin revenues. That's number one in the stack, as you see it for 2024, where we aim to have about 200 million krone revenue. That means about 50% increase year on year in our revenues. And number two there is that we will get these public financing and corporate revenues, which we are well on our way generating. This is also high margin and this is also recurring. And number three is overall fleet growth, and where compared to 2019. Where we will also introduce, or we have introduced already e-bikes in 19, but we expect to increase our e-bikes from about 5% of the fleet to where it is now to something like 30% of the fleet. And with that scale and with those high margin businesses growing, we will be able to turn a profit by 2024. We expect something like 5-10% profit margin. Okay, and just to give you some sense check here, Donkey has been growing its operations in on a profitable manner. So if you take the unit economics of 2019 of a bike in our fleet, then we were, and this is established mass cities, which is 2/3 of our fleet was parked or operated in those cities in 2019. Then we were making 317 krone per bike per month. And the cost of rental was about 210, and we had about 70 krone per bike per month in depreciation. So that was leaving us about 50 krone per bike per month profit margin, about 14%. So we've been already running a profitable operation until 2019. Corona had a significant negative effect due to visitor revenue, but we are not sort of promising to run operations profitably, which we haven't before. We have done that. If you look at where we expect to raise the money and how we want to use that, we are well on our way to raise the 100 million kroner, and we will be using that for business development and marketing purposes, for software development, and also for expanding our fleet, hardware development. And then some, about a fifth, we would use for some blockbuster deals if something really attractive is on our way. In terms of fleet expansion, the equity is only going to finance, we expect about 1/3 of the financing needed of the bikes and e-bikes that we will own and operate, because partners also pay for their own fleet. So this is only for the part that we will grow ourselves. And we have the proof of being able to get debt financing for our fleet from the past also. We do the software development in-house. We have a great team. The CTO, my co-founder, leading that, and also hardware development. We have a great internal and external team to help develop our bikes and e-bikes to be the cost leaders and also have a very convenient, very good bike to ride, which many of you hopefully have ridden. And for this, we have raised already 3/4 of the 100 million. We have already raised from cornerstone investors, which includes European Investment Bank, Academica Pension, LD Fund, and Pentwater Capital. So I think we've managed to line up a very strong set of institutional investors, which we have chosen to do so because we want long-term investors who can also scale their investment with us generating good results. Yeah, so we're only raising 25 to 35 in the public offering, which will end in May 12th. So in 9 days, please don't delay in making your subscriptions. It's 16 krone per share and minimum order of 250 shares. So that's about 4,000 krone. Yes, I think that was it from my side. And I see that there's some questions coming in, Michael.
Perfect. I have a couple. I start with it, then we get to the questions. I always get this, the private placement, the pre-subscribers who you already have in, those are in at the same price as now you are public. There's no difference in those two. Is that correct, Adam? I always get the question.
That's really also, as I understand, rare, and we've achieved that. Yes.
Perfect. And then you also talked a little about your revenue was hit by COVID-19. Do you have a number? Have you made some estimates on what it might have been if you weren't hit by COVID-19? I know it will always be guesstimates and estimates, but have you made that calculation?
Right. So you can see here in 2020 we had 21.6 million kroner revenue. That's about 3 million euros, and without COVID we would have made 2 to 3 million euros more. So that's 14 to 20 million kroners more. So I think we would be 40 plus million kroners without COVID. How can I say that? We have a very clear and consistent year-on-year visitor revenue, and that was cut down very, very significantly in 2020. So that makes up most of that revenue gap, about 2 million from visitors only. And then it's the bike sales and also local usership that was reduced during COVID. So we are pretty confident that it would have been more in the level of 40 million.
Yeah. So visitors are tourists, just to make it clarify. Visitors are tourists, yes, perfect. And then you used the word that I don't even think I knew, the transport aggregators. Can you explain a little bit? Is that you go into an app of Rejseplan, like here in Denmark or something like that, so you are part of some more bigger way of transporting, train, bike and such stuff?
Thanks for mentioning that. We are already on Rejseplan, and we are already on many such similar apps in different countries. About 10 of them, and we are about to show up in Google Maps. Actually, I was on TV about a month ago, maybe a month and a half ago. We complained that Jump was on Google Maps and we weren't, and actually we got Google to come around, and we are about to get on Google Maps. But in terms of aggregations and so on, I think we'll see more and more people use donkeys through other apps like Free Now or ride-hailing apps or Rejseplan like apps that the public authorities are sort of behind. And yes, we are already part of those apps and increasingly will be so.
There is a question, and I know you probably get it very often, the Lime and the Boy and those very, the models are throwing out a lot of bicycles into the cities, and you might say you operate a different model, but they are still your competitors. Can you talk a little bit about how you can get profitable in a market with those who is running a model, a VC funded model? If you can elaborate a little bit about your thinking about that.
Yes, sure. The key thing here is that we are not only focusing on tier 1 cities and rider revenues. So we have quite a diverse revenue streams, and public finance and public finance, and also SaaS, the partners that we're selling to, are increasing larger revenue streams for us. But also where we are competing with them, we have a competitive product because we are offering a much more affordable trip compared to an e-scooter ride. In terms of e-bikes, we are yet to see Voi and Tier coming to market with any significant fleet and also a good product. Bikes and e-bikes have a lot of synergies. Customers or individuals who see themselves as a bike rider, they don't want to stand on a scooter idle. And customers who see themselves as a scooter rider, they don't want to break a sweat and sort of ride a bike. So, and both on the customer side, in terms of city permits and in terms of operation, we have strong synergies on the Donkey side for running e-bikes and regular bikes. And still, in terms of what you pay for a pedal bike ride, is between something like 1/2 to 1/5, depending if you're a member or if you just use pay-as-you-go, of what you would pay for a scooter ride. So there's a really big difference from a rider perspective. And then we are focusing more on tier 2 and tier 3 cities and not just on tier 1 cities. So there are quite a few ways that we sort of go around or coexist.
Try avoid the hardest competition. Yeah, makes sense. Then there's a question about your data you collect. I know some Chinese models is making smarter cities, see where people move, collect a lot of data on the riders, and then actually try to sell those data as a part of the business model. Is that part of your business model, or is it a privacy model?
Yeah. We have a diverse revenue streams, as you said, you can see here. Data sharing or data selling is not one of them. I can't say in the future we will not have any way of leveraging data more towards generating external revenue, but that is not the plan, or that's not the practice at the moment. No.
Are you planning to provide new services like cargo bicycles? I hope the Danish, the Christiania-cyklen, so you can move stuff around. You see a lot of, I see pizza, the vault and such stuff, riding bicycles and such stuff. Are you looking into new business areas like those to distinguish you a little bit and put a little bit extra on the business model? I don't know whether you can elaborate a little bit on that.
Sure. We have a great pipeline of different deals, and we probably would do that a cargo bike deal first, where a city or a partner is willing to pay for that at some scale. And we're looking at a few potential deals, but nothing concrete on that.
And I shouldn't. And there's also a part of that question that says, are you looking at better bikes, maybe 7-speed, 10-speed? Looks like someone is a little bit irritated about only a 3-speed bicycle here. And then the e-bikes and such.
Yeah, we already have 7-speed bikes in our fleet, and depending on the conditions of the city, if there's hills and so on, then we deploy 7-gear bikes. Good to get your opinion as a rider, and we try to survey our riders regularly to figure out what makes a difference for them. And on our e-bikes, we normally use so far 7 gears, and we try to have best bike and e-bike riding experience. And I think you can also see that our Generation 3 bikes, which we have 100 of in Copenhagen streets, we can see that it is having great effect. Riders are very happy about that. I can show you one bike behind me here. That's the Gen 3 bike that we have deployed in Copenhagen. Yeah.
Perfect. And now there's a little bit of an investor questions. How do you see your valuation compared to the competitors? I don't know whether you want to elaborate it or it should be left to analysts or something like that. And I know, of course, it's a very difficult question because you are the first or maybe the second going to the stock market as a e-bike mobility. How do you see it compared to maybe some of the VC rounds? I don't know whether you have any insight or want to share any insight to that, Adam.
Right. Well, the insight I can share is that similar companies to us are trading at 8 times the revenue rate, let's say, and we have been affected strongly with COVID. And if you take our 2020 revenue times 8, then that's sort of our enterprise value, and that is a very discounted value because it has a huge Corona sort of effect on it. If we didn't have the Corona effect and had sort of the 40 million revenue that I mentioned, we would have without the Corona, then we would have almost double the enterprise value if we use the same multiplier of similar companies. So I think we are actually quite generous towards the investors. And I think if you look at our investor website, then there's a really nice analysis under IPO documents. And in that analysis, there's actually a comparison of 2 other companies and their valuations. So I think you can also make your mind about if we are generous and how generous we are in that sense. But one reason that we are generous, and I Personally, I do think that our valuation is on the low side, but I could agree to it because we wanted to have long-term institutional investors, and they sort of they wanted to find a more a value that they could agree to, and that has been also more important for us.